Welcome to Trading Lounge and the Euro indices, and starting with the FTSE here. The last video we spoke about the markets being in a bearish scenario because of the US markets. So maybe we could just start with that for a moment. Let's just bring in the S&P 500 here on the daily chart. I know that you're fully aware of all of this already, but what I was trying to point out yesterday, or the last time we did the video, is that the S&P is coming into a top here, and we've probably got a top in place, and we're looking to short all of that. That's all fine, but the question was that if the S&P can pull all the way back to 2300 here, what impact is that going to have on the European indices? So that's something that we, focused on in the last video just before this turn here, because this is certainly on its way now, as you can see. So the first step that I could take to in terms of, well, the FTSE, and we look at the AEX as well. So they basically had the same count in a way. And what I mean by that is that they had already been moving down and then they'd been moving up here. So we looked at the scenario 2 days ago of a turn right on these tops here, and then looking for a minimum of 5 waves down into the 38.2% retracement level all the way forward 1 less degree in this case here. And the AEX is pretty much the same for this as well. So we're in this case here, we're looking for, maybe I can just go to the hourly chart now, but you know that 7,000, 7,100 is on the way forward 1 less degree is kind of where we're heading with this. So we did look at, we were long in the FTSE, so this is it here, looking at an A wave, then an A and a B, and then 5 waves up for a C wave to turn here. And we were long here, so the idea was to exit from here, but at the same time take short positions from here. Okay, so that's sort of where we are at the moment with this, and just hold short for the time being. So I'll check out this a little bit later. I think this is pretty much where we are with, I need to sort out this mess here, but I will look at that. Wave 4 here, and then wave 5 coming down here. We don't need that, delete that. And then we get the ABC correction from here. So an A and a B and a C. So basically, in a nutshell, we're looking for a 3-wave rally here, back to 7.4, and then 5 waves down into 7.3. When we get 7.3 here, we'll be looking for an A wave and a B wave and a C wave. It may only come to here, or it may come to the 50-60% retracement level of that there. So we can just nut that out a little bit here to give us an idea. So that's the 61.8% mark here. So we'll need to see where that comes to here, of course. So a lot of the times when a market bounces off the number 3 here, which is the top of group 1, it'll just go back to the 4 here. So anyway, we'll keep an eye on that, but if you're currently short, then the question is that do you want to hold on for this little wave 4 here or not? So let me just delete a few things here. I'll move that segment. You're going to have to keep the stock well out of the way at this. Look, I always find if you're unsure about what to do, or you're sort of deciding, you haven't actually thought it through, because you really got to kind of get scientific with everything. So I like the what if questions. What if this happened? And if that happened, then what if that happened? And so on. So an easy junction on that is pretty much to take 50% of your profits from here, or even more, 60%, whatever. And then, having some skin in the game is good. You can, get used to the market working against you, and while that's going on, trying to think clearly about what needs to be done and what you're looking to do at the next junction, and so on. So any short trade would be the retest of the 740 area here, 7,400. I'll just save that. I'm going to go to the AEX next too, because they're very, very similar in what they're doing. So this is the AEX here, and you know, this was a bit of a tricky one, because this move up, I mean, we counted this down here, and it came much closer to the 38.2% retracement level, which is actually a little bit lower at 500. But because the other markets are going to move down, we figured that, I figured that, you know, we need to look at this as an A wave and a B wave here, and and then look at a C wave moving down with the other guys. Now, this scenario here, there is still the possibility for a move to the upside here, because this move, this was the low on the cash here, this one here, and you know, this counts better as an impulse wave than it does as a corrective wave. I can see how you can get a corrective wave in there. That's not the problem, but you've got to use a bit of common sense and see what's happening in other markets. And this situation here can still have this here as wave 1 here, an A wave here, a B wave here, even though that doesn't look like a B wave, and then a C wave coming down down to 15.15 here, the 61.8%, and then push up from there. And the reason for that is twofold. It's partly because of this structure, and it's partly because of Unilever. So I'm going to bring Unilever across here. Now, let me just sort of get this into perspective a little bit here and clear it up so we can see. It's very clear from wave 3 here, we have an A wave and a B wave and a C wave here. I understand that, and what we're looking at with other markets, you know, is that, well, we're going to expand all this over a little bit. Wave C can come over here, wave 4 can come over here, wave A can come here, wave B could go here or it could go here. He would be the most likely one because of what's happening, but it's just not the best fit so far. So this is the best fit for Unilever here, and even in this move up here, we've got a lovely 5-wave structure up here for wave 1, and then we've got an A and a B and a C for wave 2 here, and then we've got 5 waves here. So it is possible to put the B wave here and go, well, this is an A wave peak, this is a B wave peak, and that's 5 waves for the C wave peak, and that's the top. It didn't make a new top above here, which it normally should do. It doesn't have to, it just needs 5 waves there. But it's sitting really quite nice as wave 3, ABC for wave 4, wave 1, wave 2, pulling back 61.8%. Here, this counts quite nicely as 5 waves here as well. So we're looking for a 50-60% ABC correction here for wave 2. And yeah, I haven't worked this out here as an ABC pattern just yet because it's all gappy and a bit lower in volume, a bit tricky to look at. But basically, you know, that can actually move up from here and continue up in this trend here. So with Unilever, you'd go long above, you know, I had this over here before, or maybe brought it down to this one here, this high. Now we can bring it down to this high. This is really working the trading levels the way they should be. But, you know, there is risk here because of what's occurring in the markets. But look, if the ASX pivots off this market, the Unilever, then it's possible for it to, you know, to move up here from here. So I'll just, you know, I'll just sort of stay clear for a little while. I normally find that, talking about group 1 here, 1, 2 and 3 here, is that normally when this becomes a retested resistance here, it will pull back down into this space, and if not into this space. But in, yeah, and the same goes in here. So if it really locks under this, you know, it can come down and spike here and then go back up. Do you know what I mean? And sit on there, and, you know, could even look on the long side there. But this here as retested resistance would bring this into play here, and then we would need to look for 5 waves down here somewhere. So I'll just look onto the was it the hourly chart? Let me just, what's it, one tick chart? We were working on a tick chart anyway. Don't worry about that wave 2 there. That can go with wave B here. We're looking at just looking at the move coming down now, okay, just on a tick chart here. So I'm thinking, counting this down here, my best count is 1 and 2 here, and then 1 and 2, and all the way down to 3 and 4 and 5 here for the third wave here, and then back to the fourth wave of 1 lesser degree here, and at the 38.2% retracement level. No, that's fine. Yeah, back to the wave 4 here, and then down for wave 5 here. So wave 4 coming back here, and then this down to here, and then the ABC correction here. So really, if we're going to have another short here, then we need to look at the bounce after this. This trend coming down here is 2/3 of the way down, so it's probably not worth shorting it at this point. You're better off being patient and waiting for a rally to occur in this space here. And this is pretty much in this pattern here, this 5 waves down is pretty much in line with the DAX. So I'm just going to bring the DAX across on a 15-minute chart here. And as you know from our charts on our website, we're looking at a move down into 11.8 here. In counting this down here, I'm looking at this as wave 1 and 2 here, and wave 3 here. Wave 4 to dance back across the 12,000, stick there for a while, jiggle around, and then drop down into 11.8. So once wave 4 matures here, then that's fine. Now this wave 3 could take a little bit more time here as well. If I could just copy that, you know, it may even come down to the 11.9 and bounce back from that point there. If you're short already in this market, well then stay short. Okay, I'll just leave it at that for the time being. Cheers.